Hey guys, welcome back. In this video, I'm going to teach you about the multi-time frame analysis. So this was the most important for taking an entry, because if you take a higher time frame means we will mark the structure, that is break of structure, change of character, inducement. Those things will be marked in the higher time frame. In lower time frame, if the price meets the or mitigate our order block or point of interest, or there is a liquidity sweep, means we will change our time frame, that higher time frame, into lower time frame for our entry. Every trader must use two time frame, that is, one is higher time frame and another one is lower time frame. The time frame you have to consider is between 1 minute, 5 minutes and 15 minutes. These are considered as a lower time frame, and 1 hour and 4 hour are considered as a higher time frame. In day trading, some of them consider 1 minute as a lower time frame and 15 minutes as a higher time frame. This also works, but mostly the combinations of 1 minute and 15 minutes are mostly used in daytime as a day trader, and 5 minute and 1 hour also is a combination, and 15 minute and 4 hour is also combination. So these combinations are mostly used in the market. As I said, you have to keep in mind that if you are taking a 5 minute as 15 minute as a higher time frame, you should use the 1 minute as the lower time frame. If you are an expert in day trading, means you should use this. Otherwise, because in lower time frame the volatility will be more higher, so you can't control those kind of volatility. So if you're not expert, means you should consider a higher time frame. That means 5 minutes or 15 minutes as a lower time frame. So if you consider 5 minutes, means you have to take a 1 hour as a higher time frame, and if you consider 15 minutes as a lower time frame, means you have to consider 4 hour as a higher time frame. So in this video, I'm going to explain how you should take an entry in a lower time frame by considering a higher time frame. So this is the image which I shown. In left is a higher time frame and right is a lower time frame view. Okay. Here in higher time frame, we usually mark the structure marking. Okay. Here the first time the inducement was taken out and the break of structure has happened. After that, the inducement taken out, we should go for buy because it is in an uptrend. Here where you will take the entry means either after taking an inducement, there will be engineered liquidity, I have marked here, and there is a last one, that is most probable zone, that is a point of interest in this order block. Either here or here, we will take an entry. Okay. How we will take the entry means, if the price hit this region, means we will have some kind, we should switch over to the lower time frame. Example, this is 1 hour, means we should move to the 5 minute candle, 5 minute. Okay. There you should mark whether there isn't any change of characters happening in a lower time frame or any liquidity sweep. Like that, you have to consider for an entry. As I said, here the price came to this region and mitigated, but there is no rejection or any reversal happened. But the price hit this region, this order block, our most probability high probability zone. After that, there will be the buyers will enter in the market. Here this region, this one here. Okay, this region I was shown here. Okay, for your understand. Here the price was hit here, and this is here we should take an entry. But where you will take the entry, whether there are series of order block will be there. If you take once the order block hit, or there is a liquidity sweep, there is a lot of things to be considered. So how we will take the entry means, once the price mitigate this region, you have to convert into lower time frame region. Here if you see, means the price in uptrend. So this is the region which was in downtrend. Okay, so downtrend, here the price will be in downtrend. After mitigate our region, the price change tend to change this in lower time frame. If you see, means this will be act as a downtrend in lower time frame. Okay, here after mitigate our region, there will be a change in character or any liquidity sweep or anything will be happen in the lower time frame. Here if you see, means for example, I have shown this was the last pullback. This was the last pullback. Okay, once the market taken out this pullback, we shouldn't mark this as an inducement, because we are in a lower time frame, and once the price mitigate our region, order block or any point of intersection means it will act as a change of character in lower time frame. This will not an inducement. After taking out this first pullback, we will find some region in the lower time frame for a buy. After taking the first pullback, there will be a change of character, and once the price reaches this region, okay, below there will be any order block will be there, or any point of interest, any engineering liquidity. There will be a lot of things you have to see. If the price hit here means we will be enter in the market. For the safer side, you have to mark this low below this low and we have to set our stop loss. Above this, we'll be taking our profit. For example, we go for a long position. Once the market hit means you have to set below this, okay, and the profit will be our higher time frame. If you switch here means entry somewhere here, and our stop loss will be below this low, okay. For us, if you want to play safer means you can take the stop loss below this one, okay, and our take profit will be our previous high. So this is how we have to consider higher time frame and lower time frame for entering the market in a SMC concept. So thanks for watching. Bye bye.